Good afternoon, everybody. Welcome to yet another edition of BL Knowledge Series webinars. This is the 22nd in the series. And today we are going to discuss the all-important question that's in everybody's minds right now. Is the ongoing economic recovery sustainable and will it last? To discuss the issue with us is a very senior person, someone who's been there, who's seen it, who's done that, and who will obviously be able to give us a lot of perspective on this subject. And that is none other than Dr. C. Rangarajan, former Reserve Bank Governor, former Chairman of the Prime Minister's Economic Advisory Council, former head of the Indian Statistical Institute, Calcutta, and right now he's heading the Madras School of Economics in Chennai. Dr. C. Rangarajan needs no more introduction than this. He's a well-established, well-known writer, columnist whose views are followed by a whole range of people, including policymakers in government. Welcome, Dr. C. Rangarajan. Good afternoon, and great to have you with us today here.
Okay, thank you. Thank you very much, Raghuvi.
Yeah. Dr. Rangarajan, what we plan to do is over the course of next 1 hour, I would be talking to you for about 40 minutes and on a range of subjects, and followed that by a question answer session from our viewers. We have over 1,000 registrations for this webinar as of now, and we are streaming live on YouTube as well. So we hope to receive a lot of questions, interesting questions for you. So we'll keep the last 20 minutes for the viewer questions. So let me start straight away without much ado to the question, which is the most important one. Is the ongoing economic recovery sustainable? We have a lot of host of indicators pointing upwards. The last 2 months have been excellent for manufacturing. Passenger car sales and automobile sales are growing through the roof. We have had record e-way bills generated. GST collections have been, for the first time, over 1 lakh crores this year. We have had a purchasing managers index, which is at a 7-year high for manufacturing. For services, it's turned positive for the first time this financial year. So a whole lot of economic indicators which are pointing upwards. Now, I'd like to know from you, is this sustainable? This is a question that all of us are worried about right now, including in government. Is this sustainable, sir?
As you just now remarked, that there are several indicators which are showing a pickup. You mentioned several of them. And the question is how sustainable these indicators are. In order to answer that question, I think, first of all, we need to understand the nature of the problem that we are facing. The economic crisis that we are facing today is somewhat different from the economic crises that we have seen earlier. In recent memory, this is the first economic crisis which has been triggered by a non-economic factor, which is a pandemic. It is the attempt to prevent the spread of the virus through such measures as lockdown, which has resulted in the economic activity coming to a grinding halt. Therefore, in my opinion, the most important thing which is necessary for the economy to pick up is the reduction in the restrictions imposed on the economy. To me, the removal of the lockdown or reducing the restrictions to a drastic extent is a condition precedent for economic growth.
That's right.
We can have a good monetary policy, good economic fiscal policy. We will come to that later. But unless the restrictions are removed, there is no way by which the economic activity can pick up. Therefore, in a sense, I believe what we are seeing today is a reflection of the removal of the restrictions or the reduction in the restrictions. In the first quarter, the GDP fell by 23%, 23.9%. That is a period in which we had the most severe lockdown, complete lockdown. Now, as we move away, it is quite possible for the economy to pick up. My own view is that possibly the second quarter will also have a negative return. I mean, a negative stance. Perhaps it may be half of what it was in the first half. But moving from the second half, which is from the end of September, during the next 2 quarters, I believe the economy will start picking up. And as it picks up, please remember that we are not talking in terms of a growth in that sense of the term. We're essentially talking in terms of reaching the level of economic activity that existed in 2019-20. And therefore, what could happen in the third and the fourth quarter is that the economic activity may pick up to the 19-20 level. And as you know, in the national income accounting, the fourth quarter has a higher weight than the previous quarters. And therefore, if the economy does perform well in the third and the fourth quarter, when I use the word well, I am essentially meaning will come up to the level of 1920 and a little more. Perhaps a little more because agriculture will do well. And the improved performance of agriculture will be reflected in the third and the fourth quarter. So perhaps we may end up the year with a rate of growth which will still be negative for the year as a whole, but perhaps maybe somewhat less than what has been projected in some quarters, like minus 10% and so on. Maybe it may be 6 to 7% is a possibility.
That's very interesting.
Therefore, what is really going to happen is a pickup in the economy, which will come as a consequence of the reduction in the restrictions. Therefore, there is a big question still hanging over our heads, and that is whether COVID-19 will behave properly in the third and the fourth quarter.
That's right.
So there is no revival or there is no resurgence of the virus and so on and so forth. On that basis, I do think that the third and the fourth quarter may be good, and maybe some part of the decline in the GDP in the first 2 quarters may be compensated in the third and the fourth quarter. But the year will end up, as I mentioned earlier,
will be negative
6 to 7% or something like that. But that is where, of course, what other players have to do will come into picture.
So you mentioned something very interesting. For the first time, I'm hearing a senior economist, analyst saying that we will do better than the projections of 10%, minus 10% that most agencies have put out, including the Reserve Bank of India, including IMF, World Bank. You're saying we'll do better than that. It'll still be negative, but it'll be better than that for the whole fiscal year. Now, that presupposes that the ongoing recovery now is sustained, that this is not a one-off festival demand, not a pent-up demand of the last 6 months, people being cooped up at homes, not being able to spend, coming out to spend now, and in the festive cheer, and the government also giving a lot of incentives for people to spend. So do you think it will sustain beyond these 2 months? That's a question that's plaguing all of us. Come January, will we still see a growth on a month-on-month basis in the economy? And will people still be outspending? Is that a possibility?
I'm essentially saying that since I defined the recovery only as reaching the level of 1920, the issue is somewhat different. If I were talking about a growth rate in the economy over the 1920 level, it is a bit of a big of a problem. But reaching the 1920 level is a level which we had already seen, and therefore, if the pickup, if the economic activity is allowed to move, and the factories are allowed to open, and so on and so forth, it will begin. Of course, there are some sectors of the economy which will take a long time to revive. For example, the hospitality sector will not, because I think we are not still allowing the trains to run. We are not still allowing the planes to fly as they used to do before.
True.
And therefore, there is no question of travel, and therefore, travel industry in all its dimensions, the hotels and all that, will take quite a long time before that segment of the economy will pick up. But I do believe all the other sectors of the economy, the manufacturing and the production sector and the service sector, can pick up. I think that is not really require an additional demand over and above 1920 is required. I mean, all that we had seen before, if it continues, then it will happen. But certainly there is a role, both for the government and the Reserve Bank and the monetary authority and the fiscal authority, to play its role. I think we can come to it, but I think they have a role to play. But certainly, to reach the same level as 1920, even the pickup in economic activity, because I believe that once the economic activity starts picking up, there are forward and backward linkages. The moment they pick up, there is a demand in one commodity. Then there are inputs that go into it. There is then they become the inputs in some other industry, and therefore there is really the whole system can be seen like an input-output table. And therefore it will automatically, because of the forward and the backward linkages, it will pick up. So we really need a much stronger pull. Otherwise, we have lost one complete year. That's what it would mean. Therefore, the next year, 21-22, will be critically important to make up for the loss that we have done during 1920. But the basic point is that since the level that we are talking about is only the previous year, I think that will be reached. I think that in the second half, whatever is lost is lost. But the second half, at least we can remain at the same level as the previous year.
The only problem, sir, is that in the run-up to the pandemic itself, our economy was not in the pink of health. 1920 was not exactly a very good year for us. So when we say we get back to 1920, it is not really a major achievement in that sense, so to say, isn't it?
Yes, I agree with you. That is why I said earlier, I am using the word recovery in a very cautious way. I think recovery is not really beyond what even the 1920 achieved. Even 1920 was a slowdown. It was one of the 4.2% rate of growth in 1920 is reminiscent of pre-liberalization than post-liberalization. Therefore, it is not a good year to compare with. But even to reach that, I'm saying, well, we may be able to do it. We have lost one half of the year, but in the second half of the year, we may be able to compensate a little bit and reach the level of 1920.
Okay, so let me then take you to the next logical question. What do you think that the government at the center should do to ensure that this recovery sustains not just in the second half of this year, but into the next fiscal year as well? What are the steps that you think need to be?
Let me put it this way, that there are, the usual argument is that in a situation in which there is weak demand, aggregate demand is not strong, then there's a role for the government. And that is that we increase the expenditures. This is the traditional Keynesian argument that is always put forward. And I suppose it is correct. I mean, I think in fact, the traditional Keynesian argument, as you know, did not make any distinction between expenditure and one type of expenditure and another type of expenditure. And that is why the famous saying, digging holes and filling them up again, also became popular. That is, any type of expenditure by the government will be okay. But I think that we have to move away from that. I mean, I think there's a need for government expenditures to probably sustain the demand at a particular level. But there are, for example, healthcare expenditures. They are paramount. I mean, you have to fight the disease, you have to fight the virus, and therefore we really need to incur all expenditures that are required to be made. And therefore, I would say all government expenditures are in a sense a stimulus. If you extend the hospital, or if you buy more masks, if you buy more of other things in order to protect the health of the economy and the health of the people, then it is also acts as a stimulus, even though the word stimulus is used somewhat differently. Therefore,
Correct.
if you go back to the traditional Keynesian thing and say any expenditure is a stimulus, then even the healthcare expenditure is a stimulus.
Yeah.
And certainly, any expenditure that you do in the form of cash flow for migrant labor or for others is certainly good, but I would regard it more from a humanitarian point of view, rather than as a stimulating a demand, because we talked earlier about the hospitality sector. That hospitality sector will not be helped just because we give more money to the vulnerable groups. Similarly, automobile sector, even though it is doing somewhat well now, the automobile sector will not be helped because of giving more money to the migrant labor and other vulnerable groups. So I look at the spending on migrant labor and others as more from a humanitarian angle rather than a demand raising angle. But then thirdly comes the government expenditure, which can actually stimulate the economy. Here I have a view, and that is that the main thing here is government to raise capital expenditure. I have a feeling that capital expenditures have a strong forward and backward linkages than other types of expenditures.
Correct.
And when I talk of investment expenditure, capital expenditure of the government, I mean not only the government proper, the administration proper, but also the public sector enterprises. They are in some of the key sectors like coal, steel, and so on. And for example, railways. Earlier on, as one of your columnists has also written about, earlier on, for example, the quadrilateral road system served the purpose. Now we can look at it in terms of the railway, the freight corridor or something, which will actually have the effect upon increase the demand for steel and so on and so forth. Therefore, to put it very simply, instead of expanding it, my idea is that the government of India must come forward with a good program of investment expenditure of not only the government, but also of the public sector units, and put forward that. And that will actually pull the economy much more than anything else. Perhaps they have already mentioned about the infrastructure pipeline, which is a term that they are using. But I think it's the infrastructure pipeline, not only of the government, but also the public sector units. Put them together, and maybe about 2% of GDP spent on capital expenditure. I think that will make a real step forward in pulling the economy.
Okay. But would you advise something a little more bigger in its spread and coverage, like what they gave just ahead of the festival, in terms of leave travel concession?
I think they have some effect, but that is why I moved away from it. I am really saying capital expenditure is the real thing. The government must really mount an aggressive program of capital expenditures. And that will really create the demand in a big way. And therefore, they already have something in mind. I mean, when they talk of the infrastructure pipeline. But a well-integrated investment expenditure program will be the answer to the problem.
So your basic thrust is that instead of giving giveaways fiscally, you should spend on capital, equipment and projects, which will have a multiplier effect across the economy.
Yes. The fiscal multiplier, as they call it, is much higher for it.
So let me now move on to another important part of the economy right now. The trajectory of inflation, as it is now trending towards 6%, 6.3%. Are you happy with the trajectory? And given that our benchmark is 4% plus or minus 2, Do you think inflation will subside by the fourth quarter? And is it really a demand inflation, or is it supply side factors which are pushing inflation right now?
Okay, I mean, I think it's there are many questions in your single question. The point really is that the inflation that we are seeing now has to be seen in the context of not only supply-demand imbalances, but also in the context of what we are doing overall in order to be able to push the economy forward. One thing that the government is talking about always is to really increase the liquidity of the banking system so that it may be in a position to be able to provide credit. Therefore, on the one hand, we are pushing liquidity into the system in order to help the private sector, and that is what is happening through reducing the CRR or opening up new refinance facilities and so on. And as we shall see later on, if we have the time, that the RBI will also have to come up to help the government also. If it is going to borrow in order to sustain the high level of government expenditure that we are all talking about. Therefore, a lot of equal liquidity is being pushed into the system. Therefore, I tend to believe that probably inflation will come down a little bit, but not to the level of 4% and all that, which is somewhat indicated by the monetary policy statement. I think they are saying in the fourth quarter, it may come close to it or something like that. Therefore, I don't think that will happen so long as we are pumping so much liquidity into the system. But then here, there's a caveat. Pumping liquidity does not necessarily mean the money supply is also increasing, because it all depends upon what the banks do with the liquidity that has been given to them. If they really lend, and if they are in a position to be able to provide credit in a larger way, then money supply will increase. Otherwise, money supply will not increase. Therefore, I have a suspicion that if with this pumping of liquidity, both for the private sector and the government, eventually we can reach a situation in which the liquidity in the system may be high. And I do not go along with the kind of discussion that happens always about inflation. Food prices are rising, oil prices are coming down. That is in relation to individual commodities. But if overall inflation, which is the general price level, is to rise, something macroeconomics must happen. And that is whether it's call it money supply, call it liquidity, or something must be increasing. So I do not know at this particular point how aggressively the banks will lend and what will happen, or the banks themselves find adequate borrowers, or all those questions arise.
Yeah.
Which we can discuss later on if you have the time. But the whole point really is that if the money supply increases, and since everybody is saying also that the output may not increase for the year as a whole, you are essentially having a situation in which liquidity is increasing, but the output is not increasing that way at all. Then you will end up with some inflation. Therefore, I personally believe that probably that inflation will remain, may not necessarily be at this level, because I think that last time the inflation picked up a little more. It crossed the 7%.
Correct. Correct.
Therefore, it may not be at that level. It may come down, but it may be in the range of 6% or something like that, even towards the end. That's my estimate of what will happen to inflation.
Would you be, that leads you to the next question. Would you be comfortable with a 6% inflation? Are you Again, I'm adding one more question to this subset. Are you comfortable with the present accommodative stance of in monetary policy of the Reserve Bank, or do you think at some stage in the near future, in the next few months, next couple of months or so, the screws should start tightening up? What is your opinion on that?
Well, I have always been known as one who does not favor inflation. So I think in the long run, it's not a good policy. On occasions, it might happen, and perhaps one may have to tolerate with a level of inflation which is not ideal, but which may be higher. Therefore, the 6% inflation that I said is the outer reach of the present scheme, 4% plus or minus 2. Yeah. So I am saying that we may be able to live with that. I mean, I think I'm not saying that that's the most ideal thing, but certainly we can, because of a very special situation in which we are placed. An accommodative monetary stance is perhaps warranted by the situation in which we are placed. I mean, I think economy is going down. We are even talking of a negative growth rate, which is unheard of in the recent period. And therefore, to some extent, we really have to take care of the situation. And therefore, I do not fault with an accommodative
policy
stance. But I have two concerns here. There are two things on which, about which the monetary authority should be careful about. One is the impact on inflation, which we discussed earlier. Namely, that if liquidity keeps on increasing, both in relation to the, as I said, the support for the private sector as well as the government, then inflation can increase. And I think the monetary authority must essentially take a stand. How far are they willing to let the inflation go? They have not taken any action at the present moment, even though it is beyond the target level, beyond the range that is permitted. I can understand that. I'm not faulting. I can understand that as a temporary situation. But that should not become a permanent situation. And therefore, after some time, I think if it continues to persist, then they will have to think in terms of what other actions have to be taken. Second is, I mentioned earlier about the fact that the increase in the reserve money, which is what the actions of the central bank results in, will lead to an increase in money supply only when the banks begin to lend, and therefore what we call the money multiplier begins to operate. And here I think there are two points that I would really like the banks to be the monetary authority to be careful. As I said earlier, that just a second, let me put it on. First, I said about inflation. Now, second, when we require all the banks to lend, I think we need to be somewhat careful about it. I certainly think that there is a need to ensure that banks do lend in this situation. But we also have to be careful, because it should not actually become a burden. Post 2008-9, a famous economist, a Nobel laureate, wrote a piece calling "Make Banking Boring." Paul Krugman wrote that. And what he meant essentially was, let not the banks lend too much. I mean, therefore, That was the advice. The entire 2008-9 crisis was traced to the abnormal increase in the credit that the previous decade saw. And that is why all the problems came. So I do not go that far. I mean, I don't think that that's a right thing to do, make banking boring. Then the bankers are not bankers. I think you have to give another term for it. So I would say that bankers should not be. They should neither be timid, nor should they be adventurous. They must strike a proper balance.
Okay.
Loans of today should not become NPAs of tomorrow. So that is the careful thing that they have to do. So my point, to summarize, because I mentioned a few things, let me summarize my answer to your question.
Yeah.
Namely that I think an accommodative stance is justified, but the monetary authority needs to be careful to look after two things. One, the impact of sustained liquidity into the system on inflation, and at what point they will have to take some action. And second, while it is desirable for the banks to provide credit, they should also be careful that the credit given is justified on various grounds, and it does not become an NPA and become a burden later. So that I think is some care is needed there.
Yeah. So let me now move on from monetary policy and the Reserve Bank to government finances. Where do you see the fiscal deficit this fiscal year? Because the government's revenues are okay. The last couple of months have been good, but you're going to end up with a large deficit between the projection and the actuals in tax collections. And they have been spending a lot in the last few months. So where do you see the fiscal deficit at the end of this year? And would you be comfortable with a number that exceeds 10%, 12%?
Well, the government of India's budget indicated a fiscal deficit of 3.5% of GDP. Many people, while discussing the budget, had some doubts about even the credibility of that number, 3.5% of GDP.
That's right.
But since COVID-19, three things have happened. One, we are saying that the GDP will go down, and it may even be negative.
Yeah.
And then we are also saying that we need additional expenditures. So we did a calculation, a colleague of mine and I did a calculation. We said that 3.5% of GDP, which is a base, will become 4% of GDP simply because the denominator of the ratio will be smaller now. That is, the GDP will be smaller.
Yeah.
Therefore, that is another 0.5% of the GDP. Our own calculations indicate that the loss in revenue will be 2.5% of GDP. Because if you recall, the budget was predicated on the assumption of a 10% growth in nominal.
Correct.
Now we are talking of minus 6, 8, 9, 10, and whatever it is. So on some calculation, we have come to the conclusion that the loss of revenue will be 2.5% of the GDP. Then there have been some announcements regarding increasing the expenditure to 2 or 3 installments of announcements. That adds to about 2.3% of GDP. So 4% plus 2.5 plus 2.3 gives you to about 8.8% of GDP for the center. And these states are concerned. They have all looked at 3% of the GDP, all of them taken together. Now they have been allowed additional borrowing also. So that is another 2%. So that is, states will become 5% of the GDP. So what you are really looking at is 8.8 plus 5% of the GDP, which is 13.8% or 14% of GDP.
That's very big.
That is, let me say, this doesn't include some other things like compensation for GST and other things. These are barely what happens because of the loss in income, additional expenditures already promised, and so on. All right, or maybe they will cut some other expenditures and replace it and so on. But anyway, we are starting at 14% of GDP. 14% of GDP cannot be met through normal channels of borrowing. After all, the government borrowing is met out of the savings of the households, because household is the only surplus sector in the economy.
Correct.
So, and maybe inflows from outside. I mean, as you know, the government securities market is open, and therefore foreigners also can invest in government paper. So, but they will all nowhere be near this 14% of the GDP. And therefore, inevitably, as you were discussing earlier, some support from the Reserve Bank will be needed. And that is what we call monetization of debt. The monetization of debt will be indirect, hopefully not direct. Direct means RBI directly subscribe. Indirect means RBI supplies it to the liquidity to the banks and others, and they can subscribe to the government paper. So that, I think, is going to be the situation. Certainly, I think this 14% is very high. And as I wrote in a column for you, that those who speak for ask for public expenditures should have also a fix on what the fiscal deficit should be. I have come to the reluctant conclusion that 14% is unavoidable, or of the GDP is unavoidable, and we really have to live with it during this year, and probably bring it down, and therefore coming back to the normalcy of 6% of the GDP for the central and state expenditure is going to take time. So to answer you, I am estimating it at 14%. I'm not very comfortable with this level, but I also feel that it is unavoidable in this situation, in the circumstances. And therefore, we really need to see how, without harming the economy, we slowly slide down. I mean, I think any abrupt change will be serious damage to the economy.
So the general discourse has been on central finances. Everybody talks about it. The media talks about central finances, but there's very little discussion or focus on the state of state finances. Many of the states' finances are in a perilous state. Are we focusing as a country, as analyst community, as the media, too much on center finances, ignoring the states completely?
Well, I do not know whether we are ignoring the states, but the point is that the problems of the state have also come up as a byproduct of the behavior of the GST, and the whole issue that has come up regarding compensation and other things has really brought to the fore the, as you call it, the perilous conditions of the state finances. That is why I think initially the government of India agreed that they can in this year go by another 2% of the GDP of borrowing. So 3% plus 2%, 5% borrowing was given. Some conditions were imposed, but most states will fulfill those conditions, even though there is no reason for the government of India to impose those conditions for additional borrowing. So in the current situation, what we are essentially saying is that the ability, let the states also have a greater flexibility to borrow. So let them also borrow more. And the Reserve Bank of India has come in as a help for the first time to buy state bonds also. So far, the government of India, so far the Reserve Bank of India has been dealing only in the central government bonds. They never used to buy the state government bonds. So for the first time, they are doing open market operations even in the state development bonds, which will make it easier for the state governments to borrow. So we are doing it, but I think finally one has really to see whether the problem of what makes the state finances so tough and so difficult. I mean, I think whether it is just the lack of revenue, or is it increased expenditures on various, sometimes people call it the freebies and so on and so forth. I think there are many issues that arise in that particular context. But in the current situation, I think the additional borrowing that has been given to the states, and perhaps that does not include what they may have to borrow in order to compensate for the loss in GST.
Correct.
Plus the stepping in of the Reserve Bank of India to buy the bonds is some way of trying to help the states.
Okay. So I have a few more questions, but I think audience questions are piling up. So before I go to the audience question, one last question from my side for you. If there are 3 immediate reforms that you think the government should embark upon in the next 6 months, to a year possibly, what would be those 3 reforms?
Well, reforms take on a different dimension at this stage in the development of the economy. In 1991, it was a paradigm shift because we were moving away from a controlled economy to a liberalized economy. Now we have had 25 to 30 years of liberalized economy. Therefore, you are not going to have a paradigm shift now in terms of the reforms. I think these are going to be somewhat limited in nature. For want of time, let me simply list, since you asked 3, I will list 3 sets of reforms. Instead of 3 reforms, I will say 3 sets of reforms. One, of course, is the financial system plays such an important role in the system that we really need to look at what further reforms are needed in the financial system, more particularly with respect to banks. I personally think that the banking system cannot carry forward with this load of non-performing assets. And therefore, recapitalization, which is extremely important, has to take has to be looked at more exhaustively in a more expanded way, and take action on that. I think we really need to do it. But at the same time, the key question that arises is that why are they getting into this situation? After all, recapitalization, we have been doing it almost every year now from 1991 onwards. So we should not get into this situation. Now, this raises a critical question. What is the relationship between public sector banks and the government? Now, what is the kind of relationship that we should establish, which will enable the public sector banks to function as public sector banks, but independently? But I think this is going to be linked to one other reform that I'm going to say, and therefore I will leave it here. That is what? Reform of the financial sector, recapitalization, and the bond market reforms, which are I will leave it there. There's the second is we need to look at reforms of specific sectors rather than general in nature. I think the power sector, the telecom sector, These are areas in which some considerable thought will have to be given and done. I mean, I think we basically need to apply the principle of liberalization to every sector, which is to make the markets function, to make them efficient, and so on. So what is it that we need to do in the power sector? What do we need to do in the telecom sector? It is not a new issue. It has been there all along. I mean, I think after all, many committees have been appointed into but then I think we need to now come out and say, this is all the sets of reforms. And the third, very quickly, is the what I would call governance reforms. I think governance reforms of how to deal with the government more comfortably. I mean, I think this is the most important thing. The government always talks of ease of doing business. But what is the ease of doing business with the government? I think that is equally important. And I would say here that the public sector units constitute a very important part of the system, even though we are moving away from fresh nationalization and all that sort of thing. But the point really is, to go back to the issue that I raised with respect to the banks, what is the kind of a relationship that public sector unit management will have with the government? And that is, people talk about the arm's length, but nobody has defined what that arm is and how long is that length. And I think this is what is actually required. I mean, I think we need to make them efficient. Everybody accepts it. And what is the thing that is required to be done? And finally, can I say one thing, if you have the time, that is on the same issue. I really think that we moved away from the system, saying that controls are coming in the way of efficiency and so on. Now, we should not move to a situation in which regulations simply substitute controls. I mean, we can discuss on some other occasion the distinction between regulation and control. But the point really is that too many regulations also come in the way. But therefore, as I say, too many regulations come in the way of innovation. Too little regulation creates instability. And we need to strike a balance between the two. So, and I think this is an important issue because many people in the West have also estimated the cost of regulation to the society, to the enterprises. I think we really need to look at this aspect of the problem. But I will stop here because that will take another 10 minutes.
If I were to sum up what you said, the slogan of minimum government, maximum governance has to be established in function, not just in percept.
I think we need definitions of all these things. What is minimum and what is maximum and so on.
Okay, so let me move to the reader questions, sir. We have quite a few questions, so please bear with us for a few more minutes. So I'll start with this question from R. Anand. He wants to know, the role of states in economic recovery. Sustainable factor is critical. How do you see the cooperation of states in the economic recovery agenda right now?
I mean, state governments, right?
Yeah, that's right.
Well, the whole idea is that whenever we talk about the role of the state in recovery, it means both the center and the states. I mean, I think broadly the approach is the same, and in a sense that the state governments are nearer the public or nearer the people, and therefore some of the expenditures that I talked about earlier, like healthcare expenditures, and the expenditures required in order to take care of the vulnerable groups, become the major responsibility of the state. I think the healthcare expenditures,
Yeah.
People are looking forward to the state governments rather than to the central government, actually.
Correct.
Therefore, in the two categories of the three categories of expenditures, the two expenditures, healthcare and helping the vulnerable groups, should form the primary responsibility of the state governments, and they should have adequate resources. That's a different problem, but there the responsibility comes. But the state governments are also, in a sense, playing an important part in some of the other sectors of the economy. I mean, transportation and so on and so forth, because many state governments, like in Tamil Nadu, own the metropolitan system, bus system, and even outside. Therefore, all of these are critically important, and augmenting the fleet strength, augmenting these, augmenting, for example, the road system in the state are important. I mentioned about railways, but that is outside the state governments. Therefore, I think the infrastructure development that they should really look at is in terms of improving the road transport, creating what I would call industrial parks and industrial towns in order to be able to attract. These are the things that the state government should be doing.
Okay. Thank you. There's a question from my colleague Radhika Mervin, and she wants to know, as a result of the pandemic-led lockdown, many businesses, particularly in the informal sector across industries, have been forced to shutter. Restaurants, hotels, travel, poultry industry, etc. This portion of the GDP is completely lost, and hence in absolute terms, our GDP is still set to shrink sharply, though growth may look higher next year on a low base. How do we address the issue of lost GDP?
Now, lost GDP has to be compensated by higher growth in the subsequent years. But individually, as far as the units are concerned, if they are closed, it is going to be very difficult to reopen them. But certainly, I think it is in relation to your previous question or the previous one that you asked me. Namely, that as far as what the state government can do, I personally believe that the time has come to revive the kind of development banks that we had before. I think what is essentially required is that we thought at one time the bond market will replace the development banks and long-term capital will come through the bond market. But that has not happened. And therefore, I would say at the state level, it is very important to create and strengthen the state level financial institutions. Except in one or two states, in all other states, the state level institutions are also bankrupt. I mean, I think the state level finance institutions are bankrupt. But I think a strong development bank institution at the state level, highly capitalized, strong enough to be able to raise money from the market, should be set up, which can provide the capital for the smaller units. The bigger units can go to the corporate bond market. I think we should tell them that is your route. That's where you have to go. For the smaller and the medium units, I think a strong development bank type institution at the state level to look after these units is perhaps the answer.
Okay. So there's this question from Mr. Hari Tyagarajan, and he's asking, creation of employment seems to be of utmost concern. With automation in many areas, new jobs seem to slow down. How can manufacturing improve the new jobs created, and what is the role that the government of India can play in this?
Generally speaking, employment growth is linked to the growth of the economy. Even though many people talk about growth and employment as if they are two different things. To me, it is not. I mean, I think more or less, unless there is growth, there is not going to be employment. I mean, I think it is the employment is related to growth, and therefore we should do. Therefore, a strong economic growth is the one which is required in order to be able to get people into employment. Of course, the pattern of growth also counts. In a sense, a manufacturing growth, for example, has a larger employment multiplier because it absorbs labor from a plumber, electrician to the top level. Whereas the service sector of a certain type does not do that. But the point is that the pattern of growth is important, but the issue that has been raised, namely that what is happening to technology, is a much larger issue. And that is an issue which is going to haunt much more the developed economies rather than the developing economies. I think
correct.
That there is going to be a time when people are talking about from 5-day week to 4-day week, because there is not going to be enough job, enough activity for the people. The machines will do it. And therefore, you will end up with generating income and probably distributing it through some channel through the government or something like that. So that's not going to happen. But we are still a little far away from that. I mean, I think we are not yet there. We will also be there. I mean, not immediately, but we will also be there. Therefore, I think we have had a problem. I mean, from even in our own country, from the handloom to textile. When the textile mills happened, then handlooms fell back. And then we introduced a subsidy system in order to support them. But the subsidy system can last only for some time. Ultimately, we have to live with the fact that superior technology is available and it is going to hold sway. But certainly, I think that what we really have to do is to train people. I think this is the only alternative that is left to us. Train the people for the improved technology or better technology. Whether all of them are fit for it is another question to answer. But the point really is that as technology keeps on changing, we need to train the people to fit into the new technology that is coming in.
So thank you. And there's this question from another viewer, Mr. Ranganathan. His question is, for high economic growth, credit needs to significantly increase. Do you think banks have the capacity to do this at this point in time?
No, at this point in time, they have the capacity to lend what is required. I mean, I think this is not the big issue. As we were talking earlier, we are talking of the level of 1920, 2019, 2020, and so on. So at the moment, in order to get the economy out of the predicament in which we are placed, they have the thing. But as I mentioned earlier, that recapitalization becomes important. I think this is one of the important requisites for the banking system to expand and lend more. Therefore, the recapitalization of the banks is absolutely essential. If the public sector banks have to play the role of providing additional credit, the rate at which the credit will have to expand will be quite substantial if you want, let us say, an 8% rate of growth in the economy. Remember that in between 2005 and 2008, 9 or 9, 10, the credit growth was of the order of almost 20% a year.
Correct.
That is also the problem, but it did grow at that particular rate, and therefore you will require the capitalization of the public sector banks in a big way if they have to play that particular role, and that is where the government action is also needed. But the private sector banks can go if they can convince the market that there is a role for increased credit. And if they can raise the funds from the market, it's okay. But for the public sector banks, the government fisc is also important, and therefore whether they can provide that credit and provide that capital. That raises one fundamental question, namely whether we need all public sector banks or whether you need only a core of public sector banks, which will give some direction to the system. That's a separate issue.
That brings to mind, this is a question from my side. Couple of weeks ago in an interview to this paper, the finance minister, Nirmala Sitharaman, had hinted that, banks, public sector banks could be privatized, or could be a lot more shares could be offloaded to private investors in the next fiscal year. Do you think privatizing some of the public sector banks will be a good idea to let them off the apron strings of the government, find their own finances, get themselves managed on a more professional basis? Is that a panacea to this?
No, the word privatization is a very loose term. It's not very clear what people really mean. If privatization essentially means that the government will withdraw from control, or whether the government will continue to retain control over the institution. That what we have done so far is only selling the shares to the private sector. The control of the government is still there, because 51% is owned by the government, and as you know, they are not governed by the Companies Act. Therefore, the representation of the balance 49% is not equal to the number of people in the board of directors. Therefore, they are governed by a different rule. Therefore, the whole question really is that whether the government have the fiscal capacity to support as many banks as they are now, which I mentioned about the capitalization and the ability of the government to carry on. The other is, if there are limited number of banks, and if they can carry on the credit business to the maximum extent possible, it may be a good idea. But my answer to the problem is not ideological. My answer to the problem is that, can you hear me now?
Yes, sir, I can hear you.
Yeah. As I said, the answer to my problem is not ideological.
Yeah.
The answer to my problem is whether the government have the fiscal capacity to look after so many banks. If not, you should control as many banks as you can comfortably do, and leave the rest to be sold. I mean, then it is not a question of privatization. It's a question of selling it or reducing your share to a minimum. That's it.
Yeah. On the question of privatization, there's a reader query, a viewer query. One Mr. Dilip Kumar. In fact, there's another query following that from an anonymous viewer also on the same lines. They want to know if you want to increase the capital expenditure, is disinvestment of public sector companies an option, or instead of borrowing or monetizing the deficit?
Well, the question really is that whether the disinvestment is warranted by the requirements of that particular company. No, actually, what we are essentially saying is that the government is owning that particular public sector enterprise. You disinvest, and then the government takes away the money. The money does not go to the public sector enterprise. Is that good from the point of view of the public sector enterprise? I mean, I think this is really the critical question to answer. Now, if the public sector enterprise also needs more capital, more resources, then it should be allowed to go to the market and do it. And just disinvesting that and using that money is not the wise way. But it is also a problem that we have always been announcing disinvestment in the budget.
Yeah.
And we have always fallen short of that. It is
Absolutely.
not as if we have not done it.
Correct.
Therefore, it's a question of which investments can be disinvested and what is the appetite for it in the market. You have to look at the appetite for that in the market also.
Correct.
Therefore, You cannot generalize by saying that disinvest and then get the money.
Okay. So last two questions, sir, before I let you go. This is from one Mr. Tony, and he wants to know if lowering GST for a short while will help consumption and help recovery. What's the government's concern for this approach?
I think the government's concern with the approach is that it does not have enough revenue. Actually, the biggest problem with GST is that the weighted average revenue from GST is less than the revenue neutral rate.
Oh, okay.
That is why you need to have a compensation. Why do you have to have a compensation? Compensation has come in only because of the fact that you are not collecting as much revenue as you had collected before.
Exactly.
And when people are saying that there is a shortfall, therefore, it is not as if that the government are now collecting more revenue through GST than what was existing before GST. Therefore, the whole question of lowering further here and there may be some issue because of an incompatibility between one rate and another rate of similar goods and so on and so forth. But otherwise, a general proposition is not valid.
Okay. And this is an interesting question from M. Anand. He wants to know if the Indian stock market's reactions do not point to degrowth. Are the markets over exuberant and hence ahead of real growth and recovery?
Well, this is a matter of interpretation. I mean, I don't know whether it is irrational exuberance or as Greenspan put it, or it is something else. I suppose stock market reacts to a number of factors. It is not very clear as to what indicators they use in their mind. Sometimes today's rise in the stock market is also explained by the fact that Joe Biden and Kamala Harris have been elected. This is how close that relationship is to the behavior of the Indian economy is also not very clear. Yeah. So it does. I mean, the investment in the stock market and the behavior of the stock market is important from the point of view of the economy. I mean, I'm not underestimating the role that stock market plays. After all, the ability to raise funds from the market on the part of the enterprises depends upon how strong and how robust the stock market is. Therefore, the behavior of the stock market is extremely important. But at this particular point, it seems to be a temporary phenomenon,
okay.
more bordering irrational exuberance.
Okay. So the final question, sir. This is from my colleague, so I have to ask you this question. This is from my colleague Anand Kalyanaraman. And he wants to know, is there any way behavioral economics can be employed to tackle the present crisis?
Well, this takes one to a minefield regarding what is behavioral economics and how good it is and what developments there are in behavioral economics. I will loathe to enter into that area at the last minute of our conversation. I have my views, and I personally do not think that that is a route to find an answer. I mean, I would rather say that yes, in general, behavioral attributes are important. I mean, I think we finally, we are all human beings, and the society and the economy is governed by humans, and therefore we really need to know how people react to the things. But I'm not an expert in the area, and I do not want to say anything about it.
Thank you, sir. Thank you so much, and thanks for answering every question of ours very patiently and in a very explanatory way. And I'm sure all our readers and viewers benefited from this conversation with you. And viewers, this conversation is available on our YouTube channel. You can share it. You can watch it again in case you wish to. Thank you once again, sir, Dr. Rangarajan, and thank you, viewers. Thank you.
Thank you. Thank you very much.